Like everyone wants to tokenize everything, but no one wants to supply liquidity to it. And so the questions I'd be asking in tokenization is like, okay, what are my protections legally? What are my rights as a token holder? And how can I redeem? You can't tokenize for the sake of tokenizing. You can't tokenize and, oh wow, people will magically want my asset, liquidity will magically appear. It doesn't work like that.
What's up, everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest for this episode is DeFi Dave. He is head of growth at CAP. Let's welcome him to the show. This is the Market Run-Up. I appreciate you coming on the show. I
appreciate you having me.
I have a feeling this is going to be a good one because we have a lot in common. I kind of want to talk about credit and what you guys are building at CAP, because I think credit is becoming the story again for most of the last decade that you and I've been here. Markets were driven by growth, software, speculation. But today it feels like credit markets as a whole and interest rates and the cost of capital are back at the center of almost every investment conversation. And a lot of some of the episodes that I talk about here on the show, have we entered a credit driven market again?
I don't think credit ever left. Credit is the engine that has driven the economy for the past 500, 600 years. And with every technological boom, there comes even more interest in credit, because how are you going to finance that boom without credit? Credit is magical. You're literally taking the prosperity from the future and bringing it to the present. But when you do that, oftentimes, you don't know what the other counterparty is thinking. Oftentimes, people get screwed over. There's fraud. Someone gets left holding the bag. And so how we think about this at CAP is, there's all these different economic participants in the system, and no one has complete knowledge over the market. They have knowledge in their given area. And on top of that, we think about incentives and what are people's incentives. They're going to act in their best self-interest, but how can acting in their best self-interest actually act in the interest of the entire system? That's how Bitcoin works. That's how Ethereum works. And this is how CAP works. And so at CAP, we are a credit platform that is backed by financial guarantees. And these financial guarantees are the backstop of the entire system. And instead of relying on people to make decisions, we rely on markets. And in our market, it's a three-sided marketplace where we have depositors, borrowers, and underwriters. Now, these depositors, they have stablecoins. They have USDC. They also have tokenized money market funds like Wisdom Trees, WTG, XX. We're going to announce other ones soon. They have a very low opportunity cost asset. They have stablecoins. They have dollar denominated. They have dollar stablecoins. And everybody wants your dollars. There's plenty of places to earn yield on your dollar, but where can you earn that yield consistently, and where can you earn that yield protected? And so they come and deposit with us. And then you have our borrowers. And these borrowers, right now, they're institutional asset managers. So right now we have Susquehanna crypto borrowing from us. We have a host of other ones coming in soon. We have if you go on our website, we have like 15 borrowers listed. But anyways, they have edge. They get yield for a living. They do it much better than us. So we outsource it to them. But how do we know that they're actually going to be good on their yield and, act in the interest of the system? Well, that's where the underwriters come in. And the underwriters, they have high opportunity cost assets. They have ETH, BTC, and gold. These alternative assets where it's hard to find yield on them consistently. So they come to us and backs up the entire system. And so those are the three parties. And how does it work? And so you have the borrowers and underwriters. They'll come to an agreement. And the borrowers will present themselves like, hey, this is who we are. This is our strategy. It's up to the underwriters to go ahead, do the due diligence. And if they feel comfortable, both sides sign a legal agreement off-chain. And the borrower will delegate their capital to the underwriter will delegate their capital to the borrower, which is about saying like, hey, these guys are good. We're putting skin in the game. If they screw up in any way, it's our ass, basically. And so they go ahead, they delegate the borrower. The borrower now has this capital, and they can use that as collateral to access depositor capital. And so they go ahead, they access, the capital, and they take out a loan, which is akin to an over collateralized Aave loan. They go ahead, they do their strategy. Could be on chain, could be off chain. It's up to them. All they have to do is manage the loan, pay back the loan to the depositors. To the underwriter, they pay basically premium fees, anywhere between like 1% to 4%. And then all the money they just made at no cost of capital. And so they love us because, in their eyes, they just received an uncollateralized loan, anywhere between like 8 to 11%. So, they love that. Underwriters love us because they're getting USD denominated returns on their alternative assets, on their, ETH or BTC or gold, 2 to 4% in real yield. And users love us. These depositors love us for two reasons. One, they're always protected from downside risk. And so let's say a borrower goes ahead and runs off. Remember, it's the underwriter that vouched for them. The depositor remains fully collateralized, even though the borrower is uncollateralized. The depositor is fully collateralized by the underwriter. And because of that, the borrower messes up, the underwriter gets slashed, they get penalized, and that's sold back into the platform to protect them. Always protected from downside risk. And then the second reason is I like to call CAP the infinite canvas of yield, because instead of relying on one borrower or one yield generator or one team, or relying on people to make decisions to allocate capital, it's not manual allocation, it's autonomous allocation. Because it's autonomous allocation, you're always allocating to the highest performers within the system, within the market, that is guaranteed by the underwriters who vouch for and originate these borrowers. And so that's the CAP system. That's how it works. Last year, we raised our seed round from Franklin Templeton leading. Institutions, they love us. I like to say institutions love CAP, and they do. This year, we actually just finished our Uniswap CCA token auction. That started at 75 mil, which was the same round that our seed round was at. And that got up to 100 million. That was 5x oversubscribed.
Nice.
Yeah. And then the token launched. It's done quite well since then. But I'm humbled by the journey ahead. And there's a lot of work that needs to be done. That's
okay.
That's
so it sounds complex, but so there's like basically three ways that you could get involved. But I guess as an investor, what is the biggest thing investors still maybe misunderstand about today's credit environment? And maybe coming from like CAP standpoint, how could you, I guess, bring someone in and let them know, okay, yeah, we are trusted and it's okay to use us?
Yeah, I think there's a number of issues plaguing credit today. Opacity, scalability, liquidity issues, verifiability. How do you know if your assets are there? How do you know if these loans can scale? How do we know if we can redeem? These are all
big questions.
These are all big questions. And with CAP, all these questions are answered. CAP, our stablecoin CUSD, is fully redeemable. It's instantly redeemable. You can verify the loans on chain. You can see the health of the loans on chain. You can see who the borrowers are, and you can see who's underwriting them. And so you have a lot more freedom and flexibility to do due diligence as a depositor. And right now, like if you're a borrower, let's say, like it's in your best interest to pay back the loan, because like, yeah, you can run off the money. No one's stopping you, but that ruins your reputation. No one's going to lend it to you again. And it's all seen on chain. The evidence is all there.
Yeah, we will find you.
We will find you. We don't even have to find you. I mean, it's all about keeping people honest at the end of the day. We don't have, for traditional credit, traditional finance, you have, the power of the state and the power of legal contracts. And yes, that works, but that takes a long time. It takes a long time for stuff to go through courts. We in DeFi, we on chain, we have code. We have smart contracts.
Batman.
We are Batman. We have Batman. But so we can execute these agreements, these objective agreements expressed on chain instantaneously. And so you don't have to wait years in courts. If some loan is not in good health, you can just liquidate it like that.
I think when we talk about markets and some of these like mixed signals when it comes to investors, AI has remained one of the strongest investment themes. I know that you are chronically online just like me, so you see it all the time. equities are near highs, yet I think crypto has struggled to attract sustained inflows, minus kind of this like volume that we just saw on Solana the last 2 or 3 days with the Ansem token. I mean, it was crazy. Is it Black Bull? Black Bull is the token. I mean, it's crazy watching that during a bear. Where do you think capital is actually flowing today, and what does that tell us about investor confidence?
Well, to go to your last point about AI, whether it's AI or Ansem and the Black Bull, right now, these are great stories. These are great stories that investors can digest, wrap their heads around, and get behind. The story with the Black Bull, from like what my observations is, Ansem was waiting for the pump fund stimmy, it never came, and he was like, "Oh, I'm going to do my own stimmy," or someone did it. I don't know the lore, or like somebody did it, and I don't know. But that's gave
him 65%, I think, of token.
Yeah, and then he just gave it. That's a great story. That's a great story to revive the Solana trenches. Now, on the flip side, with the power and promise or perceived promise of AI, there's a lot of, it's in its, potential phase, or like near, everyone's like, oh, like it can do all this. I mean, I view it as an intelligent software layer that synthesizes information better than anything in any way we could imagine before it. And people are like, oh, we can do things a lot more efficiently. Or I guess the more common trope is, as fucked up as it sounds, like, I don't know if they still do this, but how these CEOs like Sam Altman or Dario, they're like, yeah, we're going to cut, like, the AI is going to like disrupt 50% of jobs. We're going to make all these people like jobless. And then like investors like, yeah, because the valuations go up and stuff like that. That's a fucked up story, but that fucked up story has driven the valuations up of these companies in the past. And now what you're seeing is the Chinese open source AI models, which is really interesting. And because it's making these tokens a lot cheaper, and it's making it a lot more competitive to like the closed source American models. And it's kind of ironic because, China's known for the Great Wall of China for the internet. And yet they realize like, oh, if we want to disrupt American AI, and because they're limited in like what they can do because of whether it's like sanctions, tariffs, or whatever, they open source the models. And so, at the end of the day, it's about like the stories being told. And for a long time, crypto has not had that story. It kind of lost the plot. In 2020, 2021, 2022, you had the story with DeFi. You had the story, especially with NFTs. NFTs was probably the biggest one, most well known by retail.
It was a good year.
It was a great year, yeah. But some, I thought about this a lot, especially after ETH Denver in 2025. Because I remember after ETH Denver in 2025, I'm like, what are we doing, dog? Like, this is so depressing here. Like that we tried to, I think in crypto, we looked in too much. We kind of like drink our own Kool-Aid and thought we were the special, like shiny, like gifted kid in the class.
We were a cult. We were a glorified cult.
Why the fuck do we need like another L1 or L2 that's like slightly different, like oh, like this one is like a Solana like L2 or some shit, or like, oh, like this one's like this, like there was like a different flavor of the month that made like no difference to the end user, and that eventually reflected in the market, and it turns out
you see a bunch of them phase out.
And it turns out when you split, not just liquidity, you split attention with all these L2s. It's like, oh, all the L2s are Ethereum. No, they fucking aren't. They're stealing attention. They're stealing dev power and stuff. Like I remember in 2020, everybody was on Ethereum mainnet. And that was the thing. But then Ethereum mainnet couldn't handle it. And then everybody went to like the different chain of the month. And then L2s are like, oh, we're going to bring back. No, that did not happen. Ethereum lost the plot along the way. I think they're like getting it back. But so what I was going to say was after like ETH Denver, that year in 2025, I was talking to my friend Jingtao. Shout out Jingtao. He's in Vegas right now playing poker. But he said like Ethereum needs better storytellers. We need better storytellers. And that really stuck with me. That really did stick with me. And I developed this concept called lore building, where the best storytellers, they don't tell stories from the top down. Rather, they curate and shepherd stories from the bottom up from the community. And they amplify parts that take off. And so when I think of like really good like lore builders, I think of Satoshi early on. Like, yes, he wrote the Bitcoin white paper. Yes, he created the Bitcoin forum, but he wasn't the one that created the memes. He was the one that was the frequency that attracted all the first adherents. And with every like cycle, there's like a new class of people and a new class of lore builders emerge. An example would be Michael Saylor in 2020. He was like the lore builder of Bitcoin for Wall Street. He made it legible for the institutions to buy Bitcoin, whether it's like actually buying Bitcoin or doing all these different like whatever the fuck he's doing. But so when it comes to markets, crypto needs to just find its story again. DeFi needs to find its story again. And I think we can find this story in credit. I think we can find this story. We find this story. And it's funny now because if you talk to institutions, the story resonates with them. All the TradFi people here in New York, they're really excited about crypto. They're really excited about on-chain finance. They're figuring out like how can we port over.
But do you remember when they weren't?
Yeah, I mean, they've always been secretly interested. They might have said publicly, like Jamie Dimon might have been bashing Ethereum publicly, but no, they've been running Connects to this site since like 2017, 2018. They've always been doing like pilot programs. They've been minor parts of these organizations because you remember like JP Morgan, Citi. These are massive multinational corporations. And like, their digital asset, crypto stuff that they're doing, it's only a small part of it, but they have been in it. They have been exploring. And I would say like evidence of this is you look at the growth of tokenized money market funds over the past 5 years. It's been tremendous. It's been like thousands of percent over the past like 3-4 years. And now there's like hundreds of millions, if not billions of dollars in BUIDL, in like Benji, in WTGXX. And for the viewers that don't know, tokenized money market funds are a regulated product. They've been regulated for decades. And it was the easiest asset to port over, like on-chain, onshore for America, for these banks, and whatnot, to actually tokenize. So that's why they became a thing. And there's all different kinds of like dollar stablecoins. Like you have stablecoins as we know and love them today, these payment stablecoins under the Genius Act. You have your tokenized money market funds. You also have like tokenized deposits from JP Morgan and stuff. So there's all different kinds of dollars out there. But yeah, I digress.
What about like, I guess, private credit? It's quietly kind of become one of the fastest growing asset classes in the world. And I know that excites you guys for sure. It's been attracting hundreds of billions of dollars from these institutional investors that you mentioned. Why has private credit become such a dominant theme?
Yeah, well, private credit got huge because after 2008, the traditional banks became heavily regulated under the Dodd-Frank Act. And so because they got heavily regulated, they couldn't do a lot of the things that they were doing before. But the risk didn't leave the system. It just went elsewhere. And so instead of being done at these banks, it's being done at these private credit funds that are able to source and execute these loans. And the problem is with these is because they don't have like the same compliance or regulation or disclosures that they have to do. There's a lot of opacity there that we mentioned before. And we're not really sure like how liquid these things are. Like, I don't know if like everything's all good. Like maybe people are just over exaggerating. I don't know if they're like deep in the red. I don't know what's going on. But the point is it's like opaque. We don't exactly know. And the regulations have not like covered the area of private credit in the same way as traditional banks. And that's where, on-chain finance comes along, and especially CAP and what we're building is we make everything in our system transparent, verifiable. You can see everything is fully collateralized. You can see the health of the loans. You can see who's borrowing. And because we're a market, you can actually have unlimited underwriters. And so, I'll paint a picture for you. Like at these like Apollos and KKRs and whatnot, there's only like, they have their employees and they can only underwrite so many loans. They have, especially at scale, because at some point you're not going to beat the market. At some point, there's just not enough alpha, and then you just get farther and farther along the risk curve, and then you risk your capital. You just you don't even know what you're putting in.
Then you're fucked.
Then you're fucked. Exactly. And also these employees, do they suffer the consequences if they make a bad decision? No, they don't. They don't. But in cap system, you do. Like the people that originate the loans put skin in the game, and they get rewarded for being right, and for the borrower coming back and generating a return. But they get punished. They get penalized if the borrower doesn't. And so they do suffer the consequences of their actions.
Is it simply, I guess, maybe like a high rate story, or is there something structurally happening there then?
High rate story with what? With private credit?
Yeah.
Yeah, I think when it comes to rates, people are always looking for, a high return, but you can't have your cake and eat it too. And you could be earning 20-30% for a time, but are you actually earning 20-30% a year, or you're only earning it for a month or whatever? What matters is how are you performing year after year? And if you're earning 20-30%, God, more power to you. How our model is, we're always going to be marginally better than T-bill rate. So it's 3.5%. The T-bill rate's 3.5% now. Right now we have our interest is 5 to 7%. So right now it's 5.5%. It's gone up a bit recently. But for our system with institutional borrowers, for these underwriters vouching for them and delegating to them, that's pretty good. And it's been consistent like that for several months. We're a young protocol. We've been around for 10 months, so almost 11 months. Wow, it's going to be 11 months, July 18th. So
almost birthday.
Almost birthday. It's August.
August. Your anniversary birthday?
Yeah. So, we've been around, but not too long. So, and a lot of times with these credit platforms or stable coins, it takes time to develop trust and to build that up.
Well, it's interesting because you just made a really good point, that investors, I think, for years have just chased growth at almost any price. I myself am guilty. And today it feels like markets are rewarding cash flow, yield, and capital efficiency instead. I guess, has investor psychology fundamentally changed?
I think investors have gotten smarter. Think about it. Wall Street Bets, that phenomenon was 6 years ago. And I assume a lot of those people are still in the market or have some idea what's going on. And because of that, I feel like they're less susceptible to games. So I think investors have gotten smarter, or they know the game, or at least in crypto. That's why things are the way they are. Right now, things have been flat. So when it comes to but let's be real, we're all human. We're not susceptible to mania and stuff. And history will always repeat. And when it comes to markets, it's people always say oh, I have this number. Oh, at this number, I'm going to sell, or this and that. It's never a number. It's a feeling. It's a time. It's some event. For example, Trump coin. I mean, did you remember that clip of Aiden Ross on the live stream with Thread Guy and Frank D. Gods and stuff?
I remember? And Orangey.
And Orangey.
And they were telling him to buy what they were put all of your money.
It's just started.
All of your money in Bitcoin.
That was the most retarded stream clip I've ever seen. But Aiden was right. Aiden's who's bigger than President of the United States? Who? And he was right. Who's bigger than him? No one's bigger than him. That was the top. And that was
you could tell they wanted him off of his stream. Low-key, he kind of wanted them to leave. And I remember at the time, I had stupidly, being a gamer, right? I bought MLG. I was like, I'm here for the movement. I want the Call of Duty movement to succeed. All the gamers are buying this token. MLG's been around forever. I think there was MLG tourneys back in the day for gaming. And the second the stream started, it pumped, and then just immediately the token tanked. And I was like, seriously.
Yeah. Well, something I think about with tokens and equity, that's a big debate. Why own a token versus equity and all this stuff? I think the tokens are really good at capital formation. If you want to raise money, there's no better way to do it than a token auction or an ICO. But what equity has the advantage of is because they've been around. Equity as an asset class has been around longer. It's been regulated. They have rules that institutions can follow, and they can allocate comfortably in them. And so you have ETFs, you have endowments, you have pension funds, all allocating pretty heavily in like different asset classes, or like they just spread it across like, you know, the S&P 500, or they spread it in like the Dow Jones and this and that. Tokens, they don't have that like same buy pressure that being in like the S&P 500 has, because like if you think about it, it's like a constant like 3-3. It's just this constant floor. If you're in like the Dow Jones like 30, you're always gonna have that buy. Like someone's always gonna be buying you no matter what. Tokens don't have that. A lot of tokens, the people holding them, they're retail, and they have hands and fingers that are more slippery than soap sometimes. And a lot, and especially like in some places more than others, like they're just, I mean, you've heard the term financial nihilism. They just like go and sell. They don't believe in anything. I mean, that was so great about Bitcoin. It's because people believed in it. That's what's so great about Ethereum, or was. I think it still is. I'm an Ethereum romantic, always will be. They believed in Ethereum. That's what's like so great about hype right now. People believe in hype. They believe in the story behind hype. And so you just gotta. It's like, at the end of the day, as humans, as people, we ingest and interpret the world through stories. And if you're unable to tell that story to both a wide audience, whether it's a wide audience, whether it's an institutional audience, or whoever you're targeting, you're not going to succeed. And so it's all about getting on that level and being able to tell stories properly. And this cap story is basically like people think that they're smarter than the market. They're not. We've seen in the same way the heroes of old try to challenge the ancient Greek gods and got smited down. Our heroes, quote unquote, have fallen, whether it's SBF or Do Kwon, because they thought they were smarter than the market, and they weren't. And at cap, that is the basis of cap. We don't assume anyone's smarter than the market. We assume people are going to work in their own self-interest, and we might as well build a system that promotes that makes the system stronger. And that's the basis of cap.
Yeah, and I like how you mentioned the cap story, because you guys count firms like you mentioned Franklin Templeton and Laser Digital, Flow Traders, and then one of our personal favorites, GSR, among other investors. What do institutions understand about on-chain credit today that retail investors, I think, are still overlooking or don't quite understand?
Yeah, that's a great question. I think one of the major stories with on-chain credit that I've seen recently is, in the same way people are excited about 24/7 trading on Hyperliquid for commodities and equities, with CAP, you have a 24/7 trading facility that's open. And I mean, this is for all credit markets, but also for CAP as well. That instead of, if you're like in traditional finance and you have like an opportunity and it's the weekend, you're gonna have to wait till Monday to access that opportunity, or you're gonna have to like wait. Like there is shit you have to go through. Time has to pass for you to access a loan. But in CAP system, if you're vouched for and underwritten already as a borrower, they can go ahead and access the capital immediately. So I think like the story for institutions there is 24/7 credit facilities, and just like getting better rates. Honestly, getting better rates. The numbers matter. The maths, and also like smart contracts and verifiability. You're instead of like trusting in promises and people, you're trusting in code, and code enforces the rules of the system. And no one is higher than anyone else. You're equal in your counterparty there. So
if tokenization continues accelerating like it has been, what do you think the credit market is going to look like 5 years from now?
That's a great question. If tokenization continues, it's funny, like everyone wants to tokenize everything, but no one wants to supply liquidity to it. And so the questions I'd be asking in tokenization is like, okay, what are my protections legally? What are my rights as a token holder? And how can I redeem? That's the most important thing. And so I think all these things are going to play out. You can't tokenize for the sake of tokenizing. You can't tokenize and, oh, wow, people will magically want my asset. Liquidity will magically appear. It doesn't work like that. But in 5 years, I think it will just make finance a lot more efficient. And I think it's less about, tokenization is more of a byproduct of all these institutions coming. And when the institutions, they're already coming on chain, but when their regular everyday interactions and their relationships are facilitated on chain, that's where the magic happens. It's not about like tokenization, but like, okay, who's like transacting between the tokens? Who are the counterparties? So it's more about the relationships and it becoming a common occurrence. Like, in the same way, on a smaller scale, in the same way you're sending like Venmos and Zelles to your friends, institutions are facilitating credit agreements all on chain.
Okay, my favorite question and my last question before I let you go. I ask this to every guest and it always throws them off, but it is the best. What is the legacy that you want to leave behind on this earth?
I love this question because I think about this a lot.
Really?
Yeah.
That was perfect.
Yeah. So I'm not thrown off. So I just want to inspire people. Honestly, like it doesn't matter if it's a million people or like one person. If I inspire people to get out of their comfort zone and to grow a bit more, that warms my heart. If I'm able to facilitate relationships and have, in the words of my friend Berg, Tori, help them continue their own personal plots, I think that would be great. I think that would be really special. So shout out Tori for that.
I love her. Tell her I said hi.
I will. You know her?
Yes, we went to SALT conference in the Bahamas years ago.
Oh, I'm supposed to get coffee with her today.
Yeah, tell her, say, hey, I just did a podcast with the Blonde Broker. She misses you. Yeah, I still I have her on Instagram. Let me say hi
me
every
too.
now and then. But
Yeah, I do. Yeah, I know. She's a homie.
she is such a good human being. And she was one of the only other like females that I knew at the time that were getting into like this digital asset space. And I think I just kind of watched her thrive and grow, and we like did our own thing with our own brands, and she's just very intelligent. And I think the fact that you guys like linked up, that says a lot about you. And then to just say that, like add her in your legacy question was like, what?
Yeah, I actually just interviewed her for my own podcast, and it was one of my favorite interviews I've done. Yeah, I'll send it to you after.
Okay, that's why this was an easy conversation, easy flowing. Your podcast host.
Yeah.
Great.
Yeah, I've been podcasting for years. I had a podcast for 2 years with Flywheel. It was like a deep DeFi podcast where I did 131 episodes in 130 weeks. So I get it. I've had
What the heck? Okay.
I'm surprised we haven't met before.
I know. Well, I'm coming to New York, so if I don't see you like at an event soon, I'll be in New York. But I really appreciate you coming on the show. I think it was really insightful, and then I'm just definitely gonna follow along with Cap and everything that you and Ben are building.
Thank you so much, Erin. It's been a lot of fun, and see you soon. See you when you're in New York. We'll go to Silent Space.
Let's do it. Well, that's it for this episode. If you guys liked, make sure you follow, subscribe, and get ready for next week's episode. See you then on the Market Roundup.